36 at the time of this recording. The Dow Jones finished up 1.32% today, S&P 500 1.5, the Nasdaq 2%, Nasdaq 100 1.78, and the Russell 2000 finished up 1.73. Let's get into what happened today. So here's our levels right here. The Qs here finished above your 55 daily EMA, which is your institutional level here. And I really want to show you something here real quick. We do have a rate of change flipping up here as well. We do have our RSI creating a higher high, so we do have a bit of bullish divergence here, so that's really good. Your walls here for this week, a wall that you really want to hold here is you want to mark with me here, is your 700 level right here. So we're going to go ahead and mark it red right here. This is the big psychological level here that obviously we have rejected here quite a few times here. And obviously we do break this channel here. We do have the opportunity to come back down here and create a bearish channel here, which would be what? An inverse head and shoulders, which you can also do what? Crack as well. Then, you know, we can discuss that later on. My 95% zones here for the end of the week are 716 all the way up to 730. And to the downside here, we have obviously break here over value area low all the way down here to 661 here. You know, what can those catalysts be here? SNDK, which is Sandisk, and AMD can definitely be a contributing factor here. But it's really good to see here that we have a 55 EMA close, which is again our institutional level right here. And sitting right above here, our psychological level as well. Coming over here to a different time frame here, you can also see that these EMAs are doing what? They're curling up here, right? So they're not pointing down, right? So these were pointing down a little bit ago here. You can just see right here. If you look at the chart here, right? Went from this, right? To maybe now it's just like this, which you can faintly see right here. It's kind of hard to see, but that is flatlining and kind of curling up right here. Obviously, from an EMA technical perspective, you don't really want to see your EMAs pushing price down here. You want to see them kind of going up here with price. And again, another rate of change here, flipping positive here. You can see it here in your bars, right? So we're getting here on shorter time frames, but more importantly, on our larger time frames, you know, that positive rate of change along with their RSI here curling up here, looking to break as that 70 level over here. Coming over to the Qs here again, just some clear levels that I've marked out here. The level that you're really going to hold and pay attention to is that 700 call wall here. You do have a Morningstar reversal here in progress here. So again, Morningstar reversal. If you're long or short, not financial advice would be, right, if this is the bullish engulfing candle, right, we don't obviously want to do what? Break this candle, because that would be no longer what? A bullish engulfing candle. That's a very simple concept here. So you can go ahead and just clean the chart off right here. Look at this candle here. Mark the bottom of that candle. Again, this is a bullish engulfing here in progress. Where what might we do? Retrace like maybe halfway up here, kind of after an insane move up here. And again, that's where you kind of get your levels to understand also where price is at. Also, when you see my levels, they are really good laser levels here. Try to do my best and provide for the community here. If you haven't already, make sure to subscribe, like, and share this video. Maybe it's the difference of you changing your life and maybe helping somebody else. So I really do appreciate it here. Coming over here to the SPY, we are just kind of gapping up here. Again, we did have another daily close above the 55-day EMA. We did notate here in the last video, which is why it's important to watch all the videos. They really do all connect to each other. We do have a bullish engulfing candle right here they observed, and again now we're all the way up here. After hours we're at 758, and we did close right here another day at 757. And again, our monthly expected moves actually have us all the way up here to the upper extension here at 773. Going to go ahead and mark that green for that call wall. We're up there. The first level that I would like to tap here is 768. Again, our moves to the downside are marked here 725, 717, like maybe some doomsday type stuff here. And again, we do have our rate of change right here that is flipping positive. And again, our RSI is curling up here. So we're all seeing those things that we want to see right here in a bull market. So if you're a bull, this is really exciting to see. If you look at this chart here, I see reference Amazon. Why? Because these charts are all starting to look the same here, right? Look at this chart here. We're going to clean it off. We're going to clean everything off right here. Look at this chart here, right? These charts are all starting to look the same here again, right? So again, go back here to Amazon. Right, these were marked out in my last video, which is again why it's important to watch all these videos. We have our value area low or point of control, which you book above. We have our put wall here. Then you just have your squeeze zone here to pass all-time highs. Again, Amazon's going to look no different from what? CrowdStrike. What's CrowdStrike? Cybersecurity and software. So again, you'll notice here all these charts start to look the same here, right? So going back to SPY, right, I try to do my best here to give you an eye and glimpse of how Wall Street kind of views you know, the market, and maybe giving you a chance here to kind of be profitable as a trader. Again, not financial advice. Going over here to, well, let me continue here in this chart. So this is really bullish here. Obviously, again, you know, first level that we really need a break right here is all-time highs right here, which we're about to. Maybe we do it overnight. Maybe we have a pullback into open. Who knows? Feels like we do that quite a bit here. So again, first level over here that we want to break is 758, which it looks like we're passing here in after hours. Second level would be right up here at 768, and then obviously that third level, that massive squeeze zone here, is 774. Why am I saying reference Amazon? Because again, this looks like the same exact chart as what Amazon and what CrowdStrike and almost like what every other chart here in the market. Go over here to the M&Qs over here. Weekly expected moves up here. Actually, I'm going to have it a little bit higher up here because of Cianda, so that's a mistake right here. But again, looking to take out 652 here. Maybe that happens after AMD. Maybe chips, hardware, gap up after hours when earnings are reported for that. We did have a big earnings beat that we'll go over here regarding Palantir. And again, we do see that positive rate of change here flipping up positive as well. Rather than negative, right? So, right, sometimes you can just mark your bottoms here, right? This isn't a magic 8 ball. We want to use structure in conjunction with each other. And again, maybe we're doing the same exact thing here that we mentioned in the last video, right? Again, just clean up all the lines here, clean up all the indicators, right? We're just delete all the stuff here, right? So right here, curl down, okay? Right here, curl down, maybe retest, breakout. So again, when I'm talking about retest and breakouts, that's what that looks like here. Very clear. And again, we have our very, 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 very bullish structure. One thing that I thought was odd here was we did close below our 55 EMA institutional support, but obviously on the NASDAQ we closed above, on the Qs. So just something that you really want to pay attention to, okay? So again, the futures here did close below here, the 55 daily EMA, which I guess now maybe it's a little bit above here, but whatever. One thing that I am paying attention to, again, that rate of change shift, we did break that 50 neutral line here, so it is flipping up here. That is something that you do want to see in a bull market here. Again, we did have an inverse head and shoulder here, right, left, here's your head, here's your right. I tell people you have to be very creative with how you kind of see your charts. If you are thinking the same thing that everybody else is thinking, right, then everybody would just be rich, because that's just the truth. We did break our opponent control here. We did have a doji here, not quite, I guess, so much on SPY, but make it to also say yes, kind of had a doji here, but we lifted above that, created a bullish engulfing candle up here to the upside. Watch this level here. Looks like I have that marked out. I believe actually I have it marked on my last video, so make a fact check me on that. I don't know, but again, my levels to watch up here, those upper extensions here, all the way up to 68 here. Very, 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 very possible to hit that by the end of the week. A lot of people get caught up in they can't believe the market's going up here, but they're asking the wrong questions, right? And they're fighting the market, and that's why they're losing over here. So again, we have a point of control. We broke above that. Our next point of control, I'm going to go ahead and move this level up here that we want to hold definitely for bulls is 750. Is 748 here. And again, the levels that we do want to watch that were marked out. Again, I believe on this last video, somebody fact checked me. Are these levels up here? 756.48, which are above here, and then 758.26, and then above that we definitely have our squeeze zone up here to 760. Okay. And again, beautiful bounce off that 55 EMA in a glance, right? The 55 EMA to me is like right net buyer. So above the 55 EMA, which is institutional to me, right? We have net buying. Below it, right? We have net selling. Going over here to the stocks, we still are a bit down below our 55 EMA here, but of course, right? What is leading the market? It's stocks. And I'll get into it later in the video about one of the issues that I think we're going to have possibly with stocks and in general, maybe hardware, even though we are bullish here. And again, I always say, right, this chart will look like Amazon, CrowdStrike. Again, almost every other ridiculous looking chart, right? Run up, once you look back from here. Sorry, I don't even know what I'm saying. A little bit tired of running on fumes. So here on this chart, I don't really think there's anything technical speaking worth talking about here. I mean, really, it's about are we going to consolidate and catch a bid or not? And from a macro perspective and fundamental perspective, we really do need, chips. I mean, that's what we need, right? If the AI trade's going to continue, right, I tell people don't try to big brain it. You're either going to go up or down, right? But it's about how you manage your positions. Sometimes for stocks, you do have to just think outside the box here, right? So again, looking at charts, the technicals are all off because you're having very, very extreme moves every single day. And I think ultimately in the market, right, leading to our next subject here, we're gonna have winners and losers. But here's your call wall right here. It's at 530. That also aligns with this 55 EMA institutional level. We did close here today at 507, and we do have a lower close here than Friday. So we do have our lower low here. So that's something that I'm concerned about. Again, put wall right here at 42. We have our point of control here at 500, and then our call wall right here at 533. Our rate of change is not really flipping up here. I want to say it's stagnant, and to me that's like not catching a bid, which we're going to cover later in the video. Going over here to the material sector, right, we talked about in the last video again, which is why it's important to watch every single video. It all ties in together. People were asking questions on stream today, and I said, hey, did you watch a video? It was no. Go watch a video, please. It really helps me as a creator, but also helps you learn the structure with me. Levels that I definitely want to get back above are right here. You can kind of see it. That's where you cracked up here, right? But like really, we're your high probability zones right here. So here's your levels for the week. You have 586 here for AMAT. You have 236 here for KLAC, even though you had bad earnings. I would actually stay away from that right now, financial advice. You have your point of control right here over around 1765 here on ASML. And then you have your point of control over here at 294 for Lam Research. Coming over here to SK Hynix, you have your point of control here for Micron at 800 or so, 787 here. And the levels that I'm really looking to break out from are that 994 level here. And again, this is looking like the same chart as every other ticker. So like it's kind of exhausting. I would stay away from SK Hynix just for the Spaces IPO reference. Let me go ahead and pull up SpaceX to show you kind of what I'm talking about here. So again, you have your IPOs here. I would just stay away from these things. You can just drop an anchored VWAP, right? Once you lose your anchored VWAP, just stay away. And typically IPOs do what? Come up here, grab liquidity, a bunch of suckers, right? And then they come all the way back down here. We can't trade Samsung here, but we can trade SK Hynix. Looking at SanDisk here, well, point of controls right down here at 1,288 roughly. Let me just factor that. Right, and then you do have an active head and shoulders here left. Here's your head. Here's your right as well. So things that you want to pay attention to are those levels. And again, looking for those upper extensions here. We do have our call wall right here at 933. We do have our come back to neutral, let's call it a zero level at 997 here. And then our upper extensions right here. Maybe we break our all-time highs up here again and push up higher. Again, it remains to be seen. We have to wait for earnings, which leads us to AMD. Taking a look at AMD here, the chart, we have our implied move for earnings. It's about plus or minus 12%, right? They're not perfect. I'm not perfect, right? Nobody out there is perfect, so it's okay if you're making mistakes here in the market. I want to let you know that I would encourage you just to put a bit more work in and study a little bit more. If you have questions, just ask. A closed mouth doesn't get fed. We did have a 55 EMA institutional close above our 55 level. So we have a point of control right here, which we did close above. So I put this as our point of control. Also a put wall here as well. We have our call wall, right here at 502 at the time of this recording. We are up a little bit over 1.4%. Let me just check here. 2.14% here. We have our value area low flush zone right here at 458. And then we have our upper extension up here at 521, but really none of these technicals matter. What matters, we have our implied move for earnings that's coming up this week, I believe tomorrow afternoon. So right, these are very big moves here. Again, a simple concept, right? People try to big brain this. There's nothing big brain, right? Take your past earnings, get an average summary here. It doesn't mean it's perfect. You just flatline. It's a lottery. It's kind of gambling. We don't know what they're going to say, right? But at the same time, I ask people like, well, maybe that's the problem with the market. Why is it gambling? Because like, right, at the same time, we should really be doing what? Going up, because we're trusting you on your word, right? So I think earnings like are big trust deal, and I think sometimes that's why you see even more so now you're gonna have very extreme moves. If I can trust a company to do what they're gonna say, what they said they're gonna do on their last quarter, I'm gonna invest in this company, right? That's how Wall Street kind of views this, right? And right, it's not just coming in line here, right? You were saying you're gonna make $5 billion, you come up with like $6 billion. Like, I'm sorry, that's not a lot of money, right? We already know based on kind of what we talked about the last video regarding U.S. interest rates, gives me bonds. How basically what are bonds? Right now they're looking a little bit more appealing, right, than grabbing and getting involved in the market. We're having massive swings here and trying to hold through these ridiculous ERs. Again, you have your value area high, kind of referencing Amazon right here. It's almost the same exact chart. Would you believe it, right? So again, your wall spread right here don't matter. In my opinion, what really matters is this. What's your implied move from about here, I guess, right? So 12% here, just put it for 12. Again, what can you do here? Referencing Amazon, the same thing here. Going back to the Amazon chart right over here. Or I guess CrowdStrike in this case. The chart's just gonna start to look like this, right? You might come down, et cetera, right? But again, you just have your clear as day squeeze zones here. Gonna go back to Amazon real quick. Let's look at the chart. So your chart's gonna look like this, right? If you have really good earnings and you blow through guidance here. To the point where like Wall Street's like, wow, we really were not expecting this, right? And we want to be clear with that. It's about, wow, Wall Street was almost like caught off guard, if that makes sense. So again, your weekly expected moves here really don't matter for AMD, but I am looking for maybe that 12% up here, 12% down here. So when you have really high IV for earnings and you're at a price point like this, sometimes it's really good to just do like spreads. I think they're a lot cheaper and you have a lot higher RR. I'm not going to pay $10,000 for a contract up here when I can pay like 1 to make 5. That's a pro trading tip. Coming over here to crude oil, really nothing that's going on here in the U.S. In my opinion, right? Just kind of right again, same thing that I'm saying here, right? I'm trying to instill discipline and also just being redundant with you, showing you that we don't have to big brain this. Gonna clean off the chart here again. Really nothing going on with crude oil as well, right? We had a dragonfly doji. Someone might say, hey, that's bullish, but again, we're all the way back down here. So crude oil, USO sold off today here. Gonna go ahead and pull up USO. Again, this is a more of a macro chart here. Nothing that I really want to get involved with, right? We have the macro factor here. It's all, headline driven as well and war driven. So again, nothing that we need to get involved with, but we definitely want to pay attention to it because again, what can this chart turn into? Again, Amazon, right? Can look like QQQ, can look like gold, etc., 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 right? Going over here to the VIX, really nothing noteworthy. We're just right back down here to 15, of course. But again, tomorrow morning, I don't know, maybe Trump says I like Iran and it goes back up. So nothing that I really want to pay attention to. Nothing that's screaming, wow, be scared. Because again, right, it's been at 15 for how long? Forever. Coming over here to the USD JPY that we talked about on the last video. So basically right here, what happened, Japan's yen got historically weak. USD JPY 164. Japan spent about 53 billion alone Thursday to prop it up. Friday, the U.S. joined in for the first time since 1998, which is crazy. So again, manipulation, manipulation, manipulation. Why the hell are we joining? Why are we helping a different economy? Why are we helping our own economy? I think we would like a lot of money in our own pocketbooks, but whatever. I guess let's just invest in the stock market. That's my little rant. So basically, right on Friday, the U.S. joined in for the first time since 1998. We had $87 billion worth of revenue. Excuse me, holy smokes. We had $87 billion total over 2 days, and the yen snapped back plus 3.8%. And basically, the key twist here is, right, the U.S. bought yen with euros, not dollars. That's interesting. And why does that matter, right? Line by line. Cheap yen equals borrowed money that funds U.S. stocks. So, right, cheap yen equals borrowed money that funds U.S. stocks. If the yen retire, that money gets yanked home. That's a carry trade unwind right here, going right here. So Friday, the U.S. joined first time since 1998. This can lead to what? The U.S. The carry trade here. So right, that's a carry trade unwind that what hit in 2024. People keep forgetting about that. Coming over here to the $87 billion over 2 days, right? This yen snapped back up 3.8%, but it only breaks on a rate surprise, not a strong yen. And then right, the U.S. 30, the U.S. Let's see here, 3.50 to 3.75% for Japan's 1.0%. Gap is what matters here in regards to when the U.S. bought the yen with euros. And so far, it's a non-event. Monday's scare lasted about 10 minutes at open, and then right, we ripped up here. My Discord notes because we caught that bottom tick, bud. Watch the video at the end if you really want to see what live trading looks like. And if you're interested, join the Discord. Yeah, I'm running a current promotion here, 50% off for yearly signals. We do have the VIX here again closing at a 15.72 level. So basically, the market's pricing zero carry risk. So the market is not scared. If you're going to take anything away from the VIX, that's what it is. The Fed is priced at 57.2% to hike in September. It's not a pause. And if both banks hike, the gap holds, nothing breaks. So what do you want to watch? 2 to 3 must agree. USGP 160, the line needs to lay in the sand. VIX above 20, fear showing up. And then Friday, 8:30 a.m., non-farm payrolls, the real yen event, of course. And then right puts the bottom line here, under 160 with VIX under 17 equals a headline, not a regime change. Trade your levels, not financial advice. Coming over here to the software sector, we do see software gapping up here. We do see a rate of change that's positive here. Not really going to use IGV as a chart here, but I do find it interesting here, right? That SOX holds down, coming back here to SOX. So SOX is down here, right? But then you do have IGV, which is the software sector, ripping up here. We're going to have winners and losers in the sectors here. So when I was showing you Micron, when I was showing you SanDisk, AMAT, really this all comes down to, right, you're going to have winners and losers in the market. Which ones are those going to be? Looking at this chart here, right, we'll have two here lined up that we talked about. We have obviously Pounder that had beats. What happened with Pound here? Looks like they had their adjusted EPS here, earnings per share, 41 cents versus 35% estimate, so big smash here. You had revenue 1.94 billion versus 1.8, so 14 billion in revenue. And then the revenue growth year over year was 73%. Their net income was 1.07 billion. And their guidance was raised here, so they didn't lower it, so they raised their guidance here. They're forecasting 8.15 billion to 8.16 billion, and their Q3 revenue 2.16 billion to 2.164. Then you have your commercial here. Their prior was 3.22 billion. So it's at least 134% year over year. So 3.42 billion is that number. Then you have their free flow forecasting or adjusted free. So they're forecasting here free cash flow 4.5 billion to 4.7, which is great. That's what you want to see. Less spending, more money in the pockets, right? 4 pockets full. And then their commercial revenue was 764 million, up 149% year over year. U.S. businesses were the 81% of the totals, 115% up year over year. Total contract values are 3.37 billion, 43% year over year, and their remaining U.S. customer deal values are 6.2 billion. Their operating margins were 62% adjusted, which is a 47% gap, and again, the rule of 40 was 155%. So right, the options moving was 12% here. You're currently up here a little bit above 14%. So again, that's why it's important to mark your levels and understand, how high these stocks might go historically, which you can do yourself online. And right, after hours are currently at 144.40, up again 14.5% here. Going over here to Microsoft, same thing here, right? Big earnings, backlog, stock raises, and now you're starting to see a little bit of rotation here, which is very, very interesting. And one thing I really want to lead people with to kind of end the video is going here and taking a look at these charts here. Be really careful here. I'm going to go and give you an example of SPY. I really like people to kind of be unique with how they view the market, and this is how I view the market here. I have notes here all the time that I make on my chart. So like right here, right, you have your kind of undercut, right, retest, breakout level. So this is your retest point here. Going to be really cautious here with hardware. Maybe they rotate in the software, gap that up for a little bit. Don't know. We're going to have to obviously evaluate that over time. But again, these are all the same looking charts here, right? Up here, ridiculous looking chart here. Literally all these charts look the exact same. I kid you not. You maybe have an inverse here, left. Here's your head. Here's your right. Gap up. You got like probably close to 3 right soldiers here. But again, right, these charts are starting to look like what? Also the same, which you can get caught in a trap and also in a massive, massive, massive what? Downtrend, like an IPO here. And again, this looks no different from Nvidia a while back here. So if you look at the chart here, going to go ahead and clean it off. Right, looks like Nvidia right here when Nvidia was over here. Okay, you had a head and shoulders here, but then right, you broke out, of course. So right, what happened with Nvidia? You had a head and shoulders right here, then you broke out, of course. So maybe it's headline driven, maybe it's news driven, which I guess is a headline, and then you maybe technicals. I mean, not really, right? So all these stocks are just kind of macro and fundamental use case. You keep saying we need chips and we need this, we need that, we're going to go up. And from a macro perspective, if things are going kind of good in the country and worldwide, which they never are, you have a case to kind of go up here. Looks like the same chart as Nvidia. Nvidia runs, you have what? QQQ and SPY, right? So when I say undercut, retest your neckline, break out, right, or break down. So again, this looks like the exact shape before, again, being unique with how I view the market. Not saying that it's right, but again, just you have to be unique and creative with how you view the market from everybody else, right? So again, shape, undercut, right? Retest this neckline, undercut, retest, break out, or you're going to break down here. So again, undercut, retest, or you're going to break out or break down. And then I end the video right here with what happens when you have extreme moves like this. You get like no bid. No bids mean like no bid, means like no buyers. You just have to kind of dead tape. Dead tape starts to look like this. I can give you a lot of other charts here, but again, here's gold for example. It's so bullish. Bottom line is you trading your Forex account with $50 is not going to move the tape. Wells and big institutions getting involved with this will move the tape. This is Wells moving the tape, not you. I'm sorry, retail, right? Again, what's moving the tape here? It's not you, retail, right? Banks, institutions, market makers. What's moving the tape here? Banks, institutions, right? And then what happens at the very end? You get this dead tape and you're here maybe for years, like SMCI, PayPal, etc., right? And again, that's what we're seeing with a lot of these stocks here. Just right, you have your big move up here, and then you just consolidate. Maybe you wait for macros, maybe wait for technicals. But again, right, we should be kind of be combining all of them. And then we have the technicals right here, fundamentals. And again, you just get dead tape, right? Netflix was up here, you're down here. Santos was up here, you're down here. Are we going to get dead tape and just like no bid here where we just consolidate? And people forget how long can you consolidate? Shit, a long fucking time, guys. This is where I end the video. Go ahead and just use this tool right here. You can consolidate for how long, guys? A long time. So when you're at your neckline like this, it's very important to recognize you can consolidate here for years, okay? So again, this free tool here on TradingView is what? Date range. Oh, 1,380 days, right? How long can you consolidate for? 1,000 days. How long can you consolidate for? I mean, You can even say this is consolidation up here, which it is, before you drop here. So that's where you want to be very careful. How someone might view kind of Western Digital, right? Your phase might be like right here, but you don't know it because it looks like all-time highs here. So you might be up here, right? So this is what you think is consolidation. Like, oh, we can go up. Can you go up? Absolutely. That's not what I'm saying. I'm not saying you're going to go up or go down, of course, right? But what I'm saying here is you can consolidate for an awful long time, guys. A very, very, right? Very, very long time. Okay. Stay safe. Grab Palantir calls here before close. Didn't mean to grab that much, but hey, we're gonna wake up very, very green tomorrow because why? Palantir is what? Up 14% overnight. Have a blessed day. Stay humble. Do good things. Help people. Help one out. Peace.